Let's stay with the theme of earnings, though, here this morning. Sticking with earnings, Foot Locker is trading. They were trading a little bit higher when I last checked in on them, and they're holding on to those gains. Look at that. All right, it's still up by about 3% here pre-market after reporting earnings this morning. And despite missing on revenue expectations here, the Vice President, Andrew Page, did assure shareholders that they expect to achieve the upper end of their revenue and earnings guidance for the full year. You know, a few things to call out from this Foot Locker report, particularly because they had actually seen something interesting in that the acceleration in apparel is actually doing better than footwear. And one thing that kind of points out to me is that you've got these exits from some of the big names like a Nike from some of their larger retail partnerships. And, you know, the hit that could eventually have on a company like Foot Locker and other retailers that had those long-standing partnerships with other manufacturers as well as they look to go more direct to consumer is, all right, where are the other categories that we need to lean into at a point in time where footwear is having its own kind of flashpoint moment where performance is blinding us with science, if you will, poetry in motion truly, retro performance is limited edition, and then ugly performance is trendy, if you will, and then fashion formal is just what you wear to the wedding that gets rescheduled from 2 years ago. And so all of that considered, this kind of reshapes the way that a Foot Locker moves forward from here, leaning into, I would bet that they would need to lean further into a partnership like they have with Deckers, because they already have Uggs in some Foot Locker locations. Deckers, the parent company of Uggs, but they're also the parent company of Hoka, which has done extremely well over the past quarter for the company. And Decker Outdoor has them moving higher.
And Deckers reported this morning or after the close yesterday as well, right? Yeah. So yes, I mean, it also looks like Foot Locker is also pivoting a little bit towards Adidas, away from Nike. It's not as though Nike is pulling out from Foot Locker entirely, far from it. It's just that Nike is devoting more of its resources to that direct-to-consumer channel that you're talking about. Something else stuck out to me from this quarter, which is inventories, because that's a theme that we have been watching very closely with these various retailers, that they were in the pandemic mindset of build up inventories, and then if there is more of an adjustment downward in consumer demand, then they end up getting hit by that. So merchandise inventories for Foot Locker, $1.4 billion at the end of the quarter, 37% increase year over year. So Foot Locker, it's happening to them too, just like it's been happening to the Targets and Walmarts and seemingly everyone within the retail space. And
you wonder what kind of discounting is necessary to move through some of that inventory, or where they've prioritized the type of inventory that they are backed up on. If it's something that is a more classic shoe that's always going to be in style, sure, you might not have to do as heavy discounting as it'll always seasonally be in trend in that point. However, if it's something more towards a running shoe or a basketball shoe, in that instance, when you've got a consistent wave of new products that are being released by the manufacturers, that would cause you to do more deep discounting going forward from there. But that's a great call out in terms of the fact that this is a company that also owns Champ Sports. They own Foot Action. And so if you see any of that deep discounting start to take place on some of that inventory, that's exactly where it could hit on their margins.
Well, that's really so forget about what it means for the companies for just a moment. I think this is a really, really key point that you bring up coming out of this week, where we heard from so many retailers that are seeing this build in inventories. Are we going to start to see price cuts? Yeah. Are we going to start to see the return of discounting? Retailers were sitting pretty the past few years after getting the consumer used to promotioning for years. You could not go into a store, most stores, without seeing some kind of sale.
Right.
Over the past 2 years, that activity really almost ground to a halt. People were paying full price, and now, of course, people are paying higher prices. Are we going to see a very rapid reversal of that, which will in turn bring down some of the inflation numbers, particularly for apparel and footwear, but even some of the other consumer discretionary goods? And what effect is that going to have to the overall inflation numbers? I know it's early. I might be getting ahead of myself, but I think it's a really important question coming out of this week. So one that we will continue to watch very closely.